All right. Hey, y'all. Welcome back. So, in the last video, we covered accumulation. And I want to start this one by clearing up something super important. Accumulation and structure are not separate things, right? It's not separate worlds. Even while price is ranging inside an accumulation zone, it's still probably making highs and lows on a smaller scale. Structure is pretty much happening everywhere all the time. Accumulation just means that structure hasn't broken out into a clear direction outside of those ranges. And so in this video, we're locking in exactly what a higher high and a higher low, a lower high and a lower low, a lower low and a higher low are. It can be a tongue twister, and I want to be precise about this from the start because it's the foundation for everything else in this series. Highs and lows are not one single line of points alternating back and forth. They're two separate chains moving at the same time. So the high chain is its own thread, a high followed by another high, followed by another. The low chain is its own thread sitting underneath. It's moving right alongside it. And so once you can see both of these chains independently, reading any train will become a lot clearer for you. So let me show this to you on the chart. Let me share my screen here. All right. So, for example, right? Let's just go ahead and build this from the ground, right? So let's say the high chain, which is PTO, the uptrend, price decides to make a high. Then it makes another high here that's higher than the last high, right? And then it makes another high, and that high is still higher than the last high, and it makes another higher high. This is what you call an uptrend, right? And this is the up chain of this, which is basically the top component of this trend. So price makes a higher high. Okay. And so let's put that into practice, right? So whenever you think of the two directions we trade in the market, I'm going to call those PTOU, PTOD, right? So PTOU is an uptrend, PTOD is a downtrend. And so what that means is price makes a high, right? Which at this point could be the highest point of the market or maybe the highest point of a last market. And you're typically going to identify those as the green candles, right? And so when price makes a high and then it comes to make a high that's now higher than the last high, it becomes a higher high because it's higher than the last high. And when it continues to follow that pattern, it's basically continuing to build on that trend. And so I would call that, that's the high chain that's happening at the top of this PTOU. And then at the bottom of that, we have this lower chain that's happening, right? And so this is now price moving at the same time underneath it. So price makes a low, right? And then it makes another low that's higher than the one that was before the other one. And so now that becomes a higher low. And then a low after that is higher again, which is now another higher low. So you have two chains that's happening on both sides. You have the top points making higher and higher and highs, and then you have that bottom that's kind of following at the same time, right? And so both chains are consistently climbing together. The high chain, these high points are making higher highs after higher high. And then the low chain of this PTOU is making higher lows after higher lows right underneath it. That's what actually builds this as an entire uptrend. It's not one thing alternating between each other, it's happening all at the same time in the same direction, right? And so if you flip that to the other side, and I'll show you this on the chart as well, and we have a PTOD, you have the chain at the top going from, let's say it goes from this peak and now makes a lower high than the last high, which means it's lower Now we're moving again to another low point, right? And then on the bottom of this chain, we have our bottom chain that's also making a lower high, and then it's going lower and then now making a lower low, and it's getting lower and lower right underneath it. And so here's the practical method I use to keep this simple while I'm looking at a live chart. So let's now bring this up here, right? When I'm looking at a live chart here, right? Let me adjust my screen here. Okay. When I'm looking at a live chart, I treat the green candles as my high points and the red candles as my low points, right? And so if you have, let's just clear this out right here. So let's just go here in a downtrend. So if you have a candle, let's say price is at the highest point here, right? Let's just say that it's at the highest point here. Let's go to our 4 hour. This is what we're going to be basing this on. Sorry. You're going to base this on your 4 hour chart. I'm so sorry. I was on the wrong chart. Okay. So let me go back over here. Hold on. Let me find it. There we go. All right. So whenever you're looking for this higher, higher, low, I am looking at this for on the 4 hour because typically I'm trading within the 4 hour time period. And so this is right now considered our high, right? Our higher high, which again, if we look at our chart here, price, this is the movement we're typically seeing when prices are higher high. But if we ever look at the chart and our highest point is at the top and there's no additional highest point, that immediately is going to tell you that PTOD is happening. We're moving down on a downtrend. And so what we're looking for right here is this was the highest point of the market, meaning there is no other point here. Or even if you scan, you don't have to go so far back to find it. But this is right now. Let's say none of this other things right here existed. This would be the highest point of the market, right? So then when I am looking for, to find this, I'm looking for price to now show me when is the next green candle. When is that next green candle? Because a green candle that closed higher or lower, it will let me know that this is where I'm going to track. In this case, this high chain, I'm going to track it based on this. So a red candle closed lower than what it actually opened up at. Now I know that sellers are pushing it down. So the bottom of this red candle is where I'm tracking my low chain, right? So my high chain is at the top of these candles, my low chain is at the bottom. And remember, they all work together. So that this gives you a consistent way to kind of follow each chain separately without blending and confusing the red candles as highs. You still may see them consistently move within that pattern, but we're only going to track it based on that. And so when we look at this chart, let's trace it. No, let's just go ahead and trace it, and we can follow the highs, from the high to the higher high to the higher high. That's the high chain climbing on its own. And then we're going to look below it and see what we find. So right here, we find that price. Let me get my brush tool here. There we go. Price made this high, right? We find our next green candle, and now we have this high. So what happened here? This high is our high point, right? And then price down here made another high, but it is lower than the last high, correct? It's lower. So then this lets me know we're in PTOD. We're going down. That's what's happening right here. We're about to go down. And so I am now going to look if price made a higher high here, but then the next high, this next green candle, remember high chains are green, red chain is red. So if this is now a lower high than the last high, what do I already predict is going to happen next? So let's just say I was in the market trading and none of this existed here. I can expect that once price made that higher high, it's going to go down on the lower chain and make a lower low than the last lower low, right? That's what I can expect. And vice versa. If price was over here, made a higher high, meaning it's higher than this last high, I can expect that next high of that chain is going to be another higher high. And then I'm also at the bottom watching price climb up with these reds. It's higher than the last low. So now these are becoming higher lows. And then very rare you have this where price dipped. So then it's like price struggled right here, but then it still continued to make those higher lows, right? And so it's just very important for you to understand that they're going to be climbing alongside each other, right? To kind of equal up. And as long as both chains are working together and you get this full uptrend, right? And that's exactly what we just want to see happening. We want to see that happen when we're watching our chart. And here's something that tricks people up because let's be clear, right? Sometime price goes back to almost those exact same levels as a previous high, but it doesn't clearly break it and it doesn't clearly fall below it as well. It just kind of sits there. That's what we would call an equal high. So let me show you how that looks. So meaning price decided right here, right? Price decided to come down here and make a low, but then this high right here couldn't beat out this last high. So then we got a lot of equal things happening here, which low key turned into what? What can we say that low key turned into? We started to accumulate here. So now we have a range happening right here. And so that's something to keep in mind. Whenever you see price fail to either make a new higher high or a new lower low, you want to make sure that you are understanding what's happening. Wait, are starting to range? Then you go into your lower time frames, right? Let's go to that zone that we were looking at here. And you start to get more clear on that picture. This is where the lower time frames matter as well. So now on this lower time frame, what is this showing me? Price is capping and ranging here. So if I happen to get into a buy and I'm like, yes, price made this higher low, it's time for us to go now make a a higher high. I'm not going to get too crazy on what I'm seeing because price is also showing me that wait, we are at an accumulated area where price can only go so far, it can only go so low. And so it's important that you start to then track this story that you found on the 4 hour. You want to start tracking this now. Like, wait a minute, what's happening? So if I go to the day and I'm tracking this, right? What's happening on the day here? Price is also making a equal low here. So then that lets me know price does not want to go lower than here. So what I should start looking for is a buy opportunity because price is capping even at the bigger layer of the day, price is capping. But when I look at, let's say none of this existed yet, when I look at the overall trend, we're still moving higher. So it's important that you pay attention to all these and so much you got to pay attention to, but it's important you pay attention to it, right? And then if I were to go to the 15-minute, I'm sure the 15-minute at that time would have also showed me that price is struggling. You see what I mean? When you mark that accumulation on that 1 hour, it's going to follow even in those small time frames. And you're able to see what's happening here, right? Price began to struggle here, right? But like I said, it's still within this accumulated area, but it's still making higher highs, higher lows. So you can still identify here, wait, price is still making, okay, we got some equal happening here. All right, we made a lower low. Wait, price made a higher high, higher than this, but we're still in this accumulated zone, but we see what's starting to build. And if we were paying attention on the 15-minute, we would watch this slowly start to build up. We would see price making, remember green points, a high. All right, we just beat out that equal. All right, this next 15-minute candle was higher than that last one. All right, we're moving up. All right, now this candle is bigger than. So you can see what's going to happen in that 1 hour candle before it's even happening because you're watching price make these higher highs and higher lows. You're watching what's happening. And so it's important for you to understand that you're using the bigger time frames to give you direction, but you're using the smaller time frames to help you also make that story true, you know? And so if price continues to move up at some point, it's going to move into the 1 hour. And then that 1 hour is going to move into the 4 hour, right? And so this exactly why I want you to watch both sides of that trend. It's important you pay attention to the high chain that's happening and what's happening on the low chain. Are they moving together, right? Is it moving to a point where it's no longer following structure and it's getting a little messy and you're kind of hesitant on it? Then it's time for you to reevaluate. Go investigate on the lower time frames. What's happening here, right? And the cool thing about why it needs to sync on all these time frame, here's the part I really want to slow down too on, because this is what actually connects, structure to your entries, right? Every time frame is running its own version of these same two chains, right? And your job as a trader is to make sure they're telling the same story before you act, right? So let's walk through exactly what that means step by step. So if we go to the day, right? And let's just say the day time frames high chain just failed to extend, right? And we're going to say right here, price should have stopped here at this low, right? Because it would have been higher here, but it kind of struggled right here, right? And then the next high came in a little lower than the high that it was already forming, right? That single piece of information at this time would tell me my overall bias that the day's low chain is now expected to break a lower low as well, right? Into a newer lower low, right? And so price at that point, now let's drop to the 4 hour here, right? Let's go to this 4 hour, right? So when price started to break here, right, and it made this low, now it's getting higher. Now I'm not just looking for any setup on the 4 hour. Let's go back to that day. All right. So let's look at the day. So let's say the day time frame is struggling to well, let's say the day time frame is now beating out this low here. You see it's getting closer, which means, hey, if it gets here, it's going to end up breaking this structure, right? And as you can see here, it did. So then if you're looking at this and you see that, you're going to tell yourself, okay, I need to get in here and be cautious because I don't know. Yes, we are still higher than all of these lows, so this could have been a liquidity grab, which we'll talk more about that later. But here's where I'm going to trade a little bit more cautiously because I personally wouldn't not get into a trade until it comes back above to beat out that high. Then that will let me know we're back on this PTOU. But if it doesn't, you want to go into the smaller time frames to investigate what is actually happening. And had we seen that, we would have saw this accumulation. And that would immediately tell me, all right, higher high, higher lows, because we initially was tracking price made a higher high, then it made a a lower high, and then made a lower high, then it made a lower high, and then it made an equal high, and then now we're in this accumulated area. Now I need to wait to trade. I need to wait for a breakout to happen before I am getting into anything. So understanding all of this across the board is so important, right? Because you're not just looking at just any chart. You're watching to see what is the day doing and how is the 4 hour responding, what's rejecting, what's not rejecting, so that you can have an agreement of what you're going to have, what you're going to do. Then by the time you go into the 1 hour, like I said, you would have seen that that 15-minute was building higher and higher and higher lows. So at some point, price was starting to shift to PTOU. Okay. But only after the time frame, you only go look for that investigation after the time frame. The bigger ones are telling you that, hey, there is a different direction that's happening and this chain is starting to lean. We're starting to break out of here. So you then go utilize the smaller time frames to investigate that and say, hey, okay, let me go see what's happening in these smaller time frames, right? And so here's why this matters so much. Because if the day's chains are leaning lower, but you jump straight into a buy on the 15-minute because it happened to look so good and you feel like it's isolated, you're going to end up fighting the bigger picture. You might get away with it sometimes because price just had like a win, but you're trading against the higher probability direction and you're not trading with it. But when the day's chains lean lower and the 4 hour confirms with its own lower high and the 1 hour agrees, and then the 15-minute finally gives you a precise entry and that zone then lines up with all of that, that's a sync setup. That's a pretty trade. That's the moment you actually want to act, right? And while you map this out before, again, we talked about this in the last video. You go to the day. What is the day telling me? Now let me connect that to the 4. What is the 1 hour saying? Now let's go see what's happening in the real time. Let me go on the 15 to see if I can find my trade, which is why I'm typically putting out call outs, buy above here, sell below here. Not because I'm thinking, right? Because I'm seeing what the trend is and I'm comparing and I'm making sure that we are getting a pretty precise setup. This is exactly why spending time studying the market before you actually are in a trade matters so much. Before I get in a trade, I am analyzing. Obviously, it's a lot quicker for me to do it because I've been doing it and it's been repetition. But typically, I am going to study a little bit before I get in the chart. And if I've already looked at the day and I've identified, okay, the high chain just failed, or hey, it just made another higher high. So now we got to go make a higher low. So now I'm not expecting to go against that, right? And if I do, I'm not like holding to dear life because I know that I'm trading against it, or I'm holding because I know that, hey, by the end of this day, price has to go make this high. So if I get into a buy down here and I want to hold, I have a high probability of it still making that higher high, right? So the purpose of that is so that you're watching this happen in real time and you've already planned what the scenarios are. You already have your zones marked up. You completely understand what's going to happen, and then you go into the 15 minutes, the 5 minutes, and the 1 minute to kind of see what's happening in real time. But when you're placing these trades, you're making sure not to trade against what's happening on the bigger time so you're on the right side. Now, can you get some breakout accumulated zones who you may get an accumulation, it may break out and then it may sell off? Yeah, you may catch some little quick wins, but my goal with helping you as a trader is so that your probability can increase like 10,000%, right? And so it's really important for you to work ahead of time, right? And to plan this out ahead of time. That way, by the time price actually gets to that point, you're not guessing, you're confident. You're just checking off what you already plan to happen. Boom. All right. That just happened. Let me see if this is going to respect. Right. And so let's just kind of do a quick recap here. Right. Let me stop sharing my screen. Let's do a quick recap. So Highs and lows aren't one alternating sequence. They're two separate chains moving together. You have the high chain and it continues to make those higher points and higher points. And then you have the low chain that's moving with it as well. And then if you flip that on the other side, you have it going down, right? And you want to use your green candles to track your high chain and your red candles to track your low chain to keep your reads consistent. And if price ever makes an equal high, and it hasn't confirmed that, hey, it can go any higher, and there's a lot of hesitation on that chain, then that confirmation from what's going to happen after that, when that one chain either breaks. So if price is doing this and that one just dipped, then you know, all right, structure is breaking. So then whatever plan you had, you have to make sure that you're on the right side of that, right? And the biggest lesson in this video is your time frames need to sync. Start on the day to start on a day to get out your overall bias on both chains. Then watch each smaller time frame, the 4 hour, the 1 hour, the 15-minute, to confirm that same story is repeating itself before you even look for your actual entry. Now, in the next video, we're going to take this sync structure and build the full uptrend sequence out completely so you can see how both chains climbing together in one continuous move and how that actually works. So let's keep building.